Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Happy Sunday and welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing great. Usually I do the video sometimes Friday, Saturday. I had a really relaxing weekend. I figured let me go to the gym, knock everything out, have a good breakfast before I start my daily routine and share some thoughts. So here we are. If you could be so kind, guys, it takes only a second. Show some love for the channel. Takes a second out. Click a like, support, click share, subscribe, all that stuff. And again, hopefully I will continue to point you in the right direction on a day-to-day basis, not monthly, not yearly. I'm not guessing where stock's going to be in 2029 on day-to-day basis based on the previous days data. And one last thing, just a reminder, if you are coming aboard or planning coming aboard to kind of kick the tires of the PS60 theory, if it's kind of a right fit for you, there's no better time. There's no better time. If you kick the tires the next 30 days, you will be included in the June 22nd kind of the refresher, right? The refresher of the PS60 theory. So it's kind of pretty cool. Might as well, again, if you are going to come aboard, might as well take advantage of the June 22nd refresher thingy-majiggy that we have. So let's talk about the team, right? A couple of things we try to always, as traders, we always try to go through experiences and put things into our mental databases, right? It's very, very important. That's how you learn. That's how you figure out the things not to do. I've always said throughout the years, it's very easy to figure out what to do. It's very tough to figure out what not to do. And as you trade longer and longer and longer, year in, year out, you start to realize what not to do, what makes sense, and what's completely irrational. Number one, the market is always going to be irrational, okay? We discussed this for years and years and years. What you think is par for the course means absolutely nothing in trading. Trading is a very, very peculiar type of business because reality sometimes trails the market 6 months to a year. So for example, in 2029, the market bottomed out, right? I think it was February, March, maybe it was May, one of these times. So it was a generational bottom of 2009 coming after the mortgage crisis. And you saw traders for the first year and a half. Well, it doesn't make sense while the market's going up, where nothing has materialistically changed. Yeah, absolutely. That's my point, right? The market has nothing to do with reality. And the more you trade, you start to realize that. That's why, when you try to make heads or tails of something, you're never going to figure it out because it doesn't make any sense. And once you absorb that and you appreciate that fact, you're just going to be trading off price action instead of what you think should be happening. I say this all the time. Trade the market you have, trade not the market you want. And this month, right, the month of May, we saw some staggering things happen, okay? Number one, if you've been watching the broadcast for a very, very long time, you know how strongly I feel about a sentiment change when the market reclaims the 50-day moving average and the market loses the 50-day moving average. In February, we lost the 50-day moving average. The Nasdaq got absolutely murdered. And what happened in May, right? In May, we reclaimed the 50-day moving average, and the QQQs have gone from literally 474 all the way up to 526.5, which was the high from Thursday. So again, if you haven't figured it out yet, okay, you don't need to think, you don't need to guess, you don't need to try to forecast. Markets over the 50-day, it's bullish. We start losing the 50-day, it's bearish. Again, you don't need to have a discussion with anybody on social media, take a poll. That's exactly what it is. Again, you can see with your own eyeballs, right? February, we lost the 50-day moving average. We went down 90 points on the Qs. We reclaimed the 50-day moving average back in May, right? And we rallied from 74 to what? 74 to 26, or 50 points, right? 52 points. So it's very, very important to understand. The second thing that we always try to reiterate is the idea that bad news, when it gets shaking off, is good news, right? The more the market continues to go tone deaf to bad news, eventually the market will start brushing it to the side and rallying. So if you guys remember, March of 2020, right? What was so significant? That was the pandemic. We closed everything up. Everybody was on house arrest. Everybody was going crazy, and the market tanked. The longer we started dealing with, COVID and this, that, the other thing, the market, again, which is completely separated from Wall Street and Main Street, completely separation, started discounting bad news. And we had the biggest 2020 rally on April 2020. And that's exactly what happened this month. If you look at the scoreboard, it's pretty stellar. Okay. You got the S&P 500 finishing May with a 6.2% gain. That's big, right? The Dow rose a little under 4%, and the Nasdaq picked up 9.6%. That is a big deal. Just to give you, put some context, more context behind it, the S&P performed. It was the strongest performance since 1990. Right? That's a long time ago. The Nasdaq, the biggest percentage besides 1997. Guys, this is a long, long time ago. So incredible results. The market continues to discount the trade war or lack of trade war or deals or lack of deals, Moody's downgrades, right? Everything, right? Trump on Friday imposed a 50% tax tariff on steel. Like, it is a lot of stuff going on, but yet here we are. So the question is, well, what happens next, right? What happens next? The market continues to show above bad news. The market continues to buy dips. The earnings have been pretty good, right? Pretty good all across the board. But does that mean we are going to continue to go higher? Again, we don't know that, right? That's the whole point. We don't know that. Again, if you look at your setups according to the next day, you're probably going to get a better sense of what's going to happen the next day, not what's going to happen for the month of June. So it's very, very easy to get into the area of bias. And because social media is literally the only resource that most, especially new traders, have, it's extremes, right? We're either going to go to the moon or we're going to crash. It doesn't work like that, guys. It doesn't work. The market is a series of events put together that's going to make up your career. A lot of inside days, a lot of distribution days, some very, very passive intervals, and then you're going to catch a massive wave, right? A massive wave, and the market's going to expand, and your stock's going to go crazy, or if you're trading to the downside, your stocks might implode, but that's your career. So the idea that something either has to go to the moon or go to zero is asinine. If you're building your career based on some schmuck on social media telling you a stock is going to the moon or a stock is going to zero, you have no career. You're just, you're living on buyer's time, right? You're a dead man walking, and you don't even know about it because, again, you're relying on opinion instead of data. So the data tells us this much, right? This is the data, right? This is the data going into Monday's session. Let's put May aside. May is over. Phenomenal, right? Phenomenal for stocks, phenomenal for sentiment. But now we are here, right? And now we have to kind of discount what happened in May because every single month, every single day is only as good as its momentum, as its sentiment, okay? So is it possible, right? Is it possible we continue to go high? Sure. Right now, again, we're above the 50-day moving average. We are, you can see the 50-day moving average is all the way down here, right? It's 480. But does it mean that stocks can't get tired? Right? Does it mean that there's a possibility that a buyer strike could happen? Absolutely. If you saw a seller strike happen all the way down on April the 7th, well, why can't we get a buyer strike as well? Again, these are something that you always have to consider going into every single trading day. Just because the stock was very, very strong for 2 weeks doesn't mean the stock just stops going higher. And again, there might be no materialistic news. There might be no company events. There might not be anything. Okay. Sometimes the market does stall out and there's a stalemate and there's a reversal in value. And that's what we have to watch for. So if you look at individual names, let's talk about them, right? So Tesla had a phenomenal month, right? You guys remember, right? The 295 breakout, the 355 breakout, everything was great, okay? Everything is great. You saw massive call buying all month that really lit the shares on fire. You saw news that ultimately Elon Musk is now stepping away from his day-to-day duties with the White House. I think from what I understand, he's still going to be some sort of advisory capacity, but his true conviction is going to be going into his businesses, is XAI, obviously Tesla, SpaceX, and everything is in. Initially, it was good, right? Initially, it was good. The market rallied the stock. And on Friday, we had kind of a bon voyage, right? Trump in the White House with Elon Musk. Thank you, Elon, for your, for your great leadership and your hard work and your ability to just be of value to this country. And the stock reversed pretty aggressively. Now, here's what you got to watch out for, right? Just because, again, we're seeing all these 400 calls come in, doesn't necessarily mean you have to go to 400 calls. Remember, a lot of guys, a lot of traders, a lot of women, whoever it is, dog, cats, everything in between, they're betting into momentum. They're betting into what they think is going to happen. And although the stock has been incredibly strong, does it have to go to 400 tomorrow? No. Does it have to go to 400 next week? No. Does it have to go to 400 ever? No. And that's the whole point. So again, we rely on data. So what does the data tell us, right? Tesla got sold off now 3 days in a row into the 10-day moving average. Why is the 10-day moving average important? Well, because 10-day moving average is the birth of the trade. As you can see here, the last time it touched the 10-day moving average, what happened, right? It tested the 10-day moving average, it held, and up we went, right? So Friday, we closed on the 10-day moving average. So again, we have another scenario going into Monday's session. If it holds the 10-day moving average, yes, we're going to start rallying back up. There is a flip side, and this is why we trade both sides of the market. However, you always have to be prepared. Right? What happens if it starts losing the 10-day moving average? What happens if all this news that made the stock run up of Elon leaving, coming back to Tesla full time, all that good stuff, the robo-taxi news, what if it's already embedded into the move of the shares? We have to be ready to the downside. So we are watching for Monday, or actually for the whole week, of Tesla reclaiming back the 5-day moving average to go higher, or just like these series events here on May the 21st, 2nd, the 3rd, if it loses the 10-day moving average, right? So it loses the 10-day moving average, that's where we potentially could get a move down. Again, it doesn't mean like social media would say, well, Tesla's going to zero. No, if it does lose the 10-day moving average, well, then it goes down here. It says this, then it goes back to all this rising support. So Tesla, definitely on watch on both sides of the market. NVIDIA reported a pretty good quarter, right? Pretty good quarter. They had a massive run up on NVIDIA. They sold it after their quarter. And just like Tesla, what's the common denominator, right? You look back on 5/23, NVIDIA held its 10-day moving average and bounced. What happened on Friday, right? It held its 10-day moving average and bounced. So the same thing as Tesla. If it reclaims back the 5-day moving average, maybe it starts moving back up. But again, there is a flip side. The way it held back-to-back times the 10-day, if it starts losing the 10-day moving average, then we have a move all the way back down to 128. Apple is having a really, really tough time with these whole tariff, the whole tariff negotiations or lack thereof. All these different scenarios for them. And it's one of the very few tech stocks this month, right? Keep this in mind, Nasdaq was up almost 10%. Apple's below the 50-day moving average, folks. That's not a good thing. And the lower it continues to stay below the 50-day moving average, the higher probability, if there is a pull, right? If there is a pull in the market, that's the stock you want to concentrate to the downside because it never rallied. It never got back above the 50-day and validate daily supply. So it's definitely a name we continue to watch. Unlike NVIDIA and Tesla, that it lost the 10-day moving average. As Apple lost the 10-day a long time ago, right? Now it's just holding on to the 5. 5 is the shortest term support for sentiment. I am watching this thing for next week in case the market gets softer. I will definitely watch Apple below last week's lows. Amazon, right? Amazon is kind of stuck in the middle of this channel here, right? It hasn't done anything for now going on its 3rd week. Pretty basic stuff here. It needs to reclaim back the 150-day SMA to start opening things up. Again, we did see some pretty aggressive call buying, especially in the beginning of the week, 210s, 212s. And ironically, Amazon got to pre-market highs of like 210, 212 couple of days ago, right? A couple of days ago. So it's very, very important just for Apple to get back above the 150-day moving average. And you got a lot of support here. So nothing is imminent on Amazon to the downside just yet. Meta, right? Meta continues to shine. Meta continues to stay a very, very aggressive distribution channel. It attempted to break out a couple of times over the last few days. Again, buyers seem to be a little bit tired. We're not getting as much option flow on a lot of the names, right? In the last 2-3 days, as you would want to continue a rally. That's why I'm very conscious of a potential pull this week. And just like Nvidia and Tesla, it did hold on to the 10-day moving average. A loss of the 10-day would result in selling. Microsoft, right? Softy continues to have a stairway to heaven. Just like, again, my previous examples. You see how Microsoft held the 10-day and bounced? So as long as these stocks continue to hold the 10-day moving average, a lot of these stocks, they will continue to kind of grind up. As soon as it loses the 10-day moving average, remember, Microsoft now, ever since it reclaimed on earnings to the 395 level above the 50-day, it's been an absolute rocket. But look how much downside you have if it does confirm the 10-day as well. CRWV, definitely one of the best IPOs of the year, has doubled now. This stock has 9 lives, man. It really, really does. Every single time you think there's going to be a day two resumption of selling, buyers step in. You had 2 examples of that this month. You had a potential blow-off top on May the 22nd, reverse the next day, and you have this massive move on Thursday. You figured, wow, that's it. This thing has engulfed 3-4 days of buying, only to rally again. So it's a very, very strong name, and it's going to get very interesting. If you're looking for a traditional backside move, I think that 10-day, just like with everything else, if it does lose that 10-day, it will be definitely on a hit list for sure. And last but not least is PLTR. What an absolute animal. And by the way, guys, congratulations for all you guys who caught it on Friday. We had a great pivot on this thing, 126.47, and then this whole channel here confirmed that 128.20, pounding the 130 weeklies, 130 weeklies, 130 weeklies. And Palantir right now is literally a hop step in a way from attacking the May highs. We got to watch this thing for this week for some continuation. Letter U has been a rocket. If you guys remember Letter U, it gave a massive pivot, confirming the May 16 highs. They continue to pound those short-term $30 call expirations. So it's going to be very, very interesting to see if the buyers are actually tired in a totalitarian state this week, or do we continue to kind of grind up? And from the macro view on the Qs, kind of the same thing as everything else we talked about. It's reclaimed back on Friday, the 5 and the 10-day moving average. Any close, and this is a very big key now, any close below 512, guys, get your antennas out, because that's where things can start getting dicey. So that's everybody. Hope everybody is doing well. I look forward to working with all the new folks in the webinar. Pivots are kind of cool. Again, not for everybody. They're kind of cool. There's a lot of moving parts. So you really have to understand what's driving the truck. Guys, have a great Sunday. God bless. And hopefully I'll see all you guys very, very soon. Take care.